You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/The Options Insider or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, your favorite, everyone's favorite, bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the Options Insider Radio Network, upon which pretty much all of you are listening to this right now, unless you found some devious way to get access to our files. And I say to you, ballyhoo to you, sir, and your technical chops. Well done, sir. We applaud any way people can get access to our stuff. And, of course, if you, too, want access to all the fine programs on the old Options Insider Radio Network, no shortage of ways for you guys to do just that. Of course, the mothership from whence all this knowledge flows, theoptionsinsider.com. Everything is up there, as well as a lot of great written content, doing a lot of tweaks to the site, so I encourage you guys to go back and check it out on a regular basis. We're adding all sorts of fun visual and content tweaks and things like that, and more are scheduled to come. So if you haven't been back there in a while, or if you just listened to the shows on the commute, surf on over to theoptionsinsider.com. I think you're going to like what you find. Breaking news on the options market, of course, all of our educational stuff, a lot of our unusual activity. We do a ton of that throughout the day, including a lot of the alerts we don't have time to get to on the show today, and even the ones we do in a lot more detail, all up there on the site for your perusal, as well as strategies and analysis and all sorts of fun stuff. A lot of growing amount of futures and futures options content up there as well. So we're spreading the tendrils far and wide. Check it out, the mothership, theoptionsinsider.com. And if you're on the go, of course, check out the mobile app available for iOS, Android, and the Fire OS. You can listen to pretty much everything we have on the network, including some of you wrote in saying, hey, the new Options Oddities program isn't in there. Yes, it is. We fixed it, so now it is in there. So if you're looking for it in the mobile app, it is there now, so you can add it to your My Shows playlist and all that other fun stuff. And you can, of course, instantly download and stream all of those shows. And then if you're listening and you say, hey, I have a question, I have a comment, I vehemently disagree, or perhaps I agree strongly, whatever your case may be, let us know. Hit that comment, hit that contact tab there over there in the app, and you can shoot us a Facebook question, a tweet, an email, even leave us a voicemail. It's all baked into the app. Really cool stuff. Check it out, the Options Insider Radio Network mobile app, available pretty much for your platform of choice. All right, and joining me on the old All-Star panel today, beaming in from the land of Maine, where he was glued to his screens today. No time for fishing for him. He is none other than the rock lobster himself, Mr. Andrew Giovinazzi, from the pit, a.k.a. OptionPit.com. Mr. G, welcome back to the show, sir.
Yes, there was no fishing today.
Unless you were fishing for bottoms. Ba-dum-bum. Oh, wait.
Yes, we're definitely looking at a lot of, it was actually, I didn't do much today. I did a little, basically, kind of, some sort of mostly just ratio call spread type stuff, like buy one, sell a couple, looking for the little bounce-a-tola. If we don't get the bounce-a-tola, I'll take the credit and go away. So stuff like that today. Not ready to sort of sell a bunch, not ready to sell more puts, at least anyway. So that was kind of that day for me, obviously. But that's what we got. I guess we'll get that into the trading block when we get there.
And speaking of getting there, before we get there, we have to introduce our other cohort here on the old All-Star panel. Beaming in from the scenic wonderland known as St. Charles, Illinois, he is Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show on this very quiet, very tranquil, very high BBI day, I'd imagine.
Yeah, I went out and went fishing. I really didn't do much. No, not really. That was definitely today was one of those days where didn't really get to go to the bathroom too much. So definitely very busy today, to say the least. See
clients, see what you're getting for your dollars over there with Uncle Mike Tusaw. The man won't even go to the potty. He is so busy over there. So there you go, sir. Well done. Hats off to you. Speaking of hats off, we do have no hats on the show today. The Viceroy, of course, on his much deserved, much needed break over there at OX, but he'll be back in probably about 4 or 5 weeks. So if you're missing some Viceroy, stay tuned. We'll get him back for you. In the meantime, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. As we alluded to there at the top of the show, it was indeed an interesting one. We are recording this today, Thursday, September 25th. You are listening to this on Friday or whatever day you choose to join us here and download, stream the old program. We encourage you to do it days, weeks, months, years even. I know a lot of you do that as well. A lot of good content in there that still reverberates months and years down the line. But at the top of the show, we talk about timely stuff like what's going on in the market today, and it was indeed a bit of a red day, shall we say, on the old street. Most of the major indices, pretty much all the major indices, selling off fairly hard today. We'll start off in S&P land. S&P is down, closing today 28 and handles and some change. That's about 1.4%. Down to about 1969 actually, and some change here on the S&P. So finally breaking free, at least in the near term here, of that death grip of the 2,000 level. Speaking of breaking levels, the Dow also breaking through the 17,000 level to the downside, off 230 handles today, or about 1.3%. Closing at about 16,978 right now, actually. My numbers are still updating. It's so robust today on the old street. And the Qs leading the charge to the downside, down about 2% to about 97.88 right here. And, of course, surprise, surprise, in all this sea of red, the lone note of green being indeed the VIX cash. Ticking up by the end of the day about 2.5 handles. It was up, I think, over 3 or about 3 at one point, and closing up about 19% on the day to 15.83. So a fairly aggressive day on the street. Of course, a lot of people pointing fingers in a lot of different directions for what could actually spark this major sell-off, and we don't like to play that game here because it's kind of a no-one-wins game. Everyone has a different idea of what was causing such downside movement on the street today, but there were a few key players, obviously, in that. Amongst them, Uncle Mike's key holding, his key day-to-day business driver. That is, of course, Apple, selling off really aggressively today, leading the charge to the downside, down to the 98 handle, or about 3.7% on the day. It's actually about 3.7 handles down as well. So well south of that mystical, magical 100 level, off the strength of a bunch of stuff. I mean, it was a banner weekend for them from a sales perspective, moving, I believe, 10 million or so phones combined. But then they turn around on the heels of that and they release a software update that proceeds to break a lot of said phones. So that's not a good thing. And then, of course, there's all those rumors about the big one actually bending when you put it in your pocket and sit down with it, not sit on it, but sit with it in your front pants even. So that's not a good thing either. So those two combined seem to be weighing on the stock today. So we'll start with you, I believe, Uncle Mike. A lot of stuff cooking in your neck of the woods out there in St. Charles. I'd imagine you were doing a lot of rolling, a lot of adjusting, a lot of looking for some puts and put spreads, perhaps to sell against your long puts. A lot of, as we like to say on this show, doing stuff. So tell us, what stuff did you do today, sir, or perhaps attempt to do?
Well, ironically, Apple was probably the thing with which I did the less stuff within.
Who are you and what have you done with Uncle Mike?
Well, I've been waiting for a pullback in Apple for a while to sell some put spreads on, but today I got the dip that I wanted, but it just kept dipping and dipping and dipping and dipping and dipping. And so I'm happy being long stock, long put for the time being. And if Apple comes up a little bit tomorrow, then I think I will sell some put spreads on it. I still like it. It's definitely some bad news with all the people out there who have the skinny jeans that want to cram a ginormous phone into their skinny jeans, and so that's obviously not good news, but it's still Apple, and Apple's still cool, which has been the basis with which I've ridden Apple up for this whole time. So I still like it, but for the time being, happy being long stock, long put. In terms of what I did today, waiting for an opportunity to do something in Apple, did not get that just because I didn't feel comfortable trying to catch a falling knife. But one thing that I did do today, going into today, I actually, probably the biggest thing that I did was I obeyed one of my trading rules, and it is killing me to do it. I am the eternal, hopeless, pathetic bull. We all know that on this show. But today, my long call on SPY, a couple weeks back, and let me give the exact time so I can give people a point of reference. On August 22nd, I rolled up my long call on SPY to the February 199 call from the October 190 call. So rolled it up to the Feb 199. And the reason for that, I was just basically trying as a way of just rolling up, let's say you're long a stock and you also long a put, rolling up the put to kind of protect your gains. And that was the same concept I was doing with the long call. Now, one of my cardinal rules, and I do this probably about once a year, is if after I do that and we go below a certain point, in this case my point was kind of in the 198 level, if we go below the 198 level, I get out of the long call. And I am simply out of the market in terms of having calls to the upside. Now, every fiber of my being right now wants to buy everything in sight in this marketplace at this point. But here's the reason for which I did that. Here's why I would suggest considering doing something along those lines if you're in a similar situation, and the way I can get burned doing it and the way with which I can benefit from doing it. Now today, just as an example, the S&P or SPY I'm looking at right now, it's down 1.6%. The VIX cash was up $2.36 or $2.37, so up roughly 18% on the day. So markets have come down, and so from the delta standpoint on that call, the call was hurt, obviously, because it was long delta. However, from the Vega standpoint, it benefited. Now, don't get me wrong. Delta kicked Vega's butt today for the standpoint of this call. That's why the call's down in value. However, because of the fact that volatility went higher today, the call option didn't get beat up quite as bad today as if you were just long stock because of the fact that volatility went higher. So, with that being said, I got out of the call option because it went below my price point. Now, should the stock market at this point stay the same or go down, I'm an obvious genius for doing that then. Because if the market stays the same, I'm not missing out on anything, and it was just a bunch of time value in there anyway. And should the market go down, well, obviously calls go down when the market goes down. So that's the good thing. So now, how do I get burned doing this, and why would and if I'm going to get burned doing this, how do I kind of manage this? Well, right now, for this section of the portfolio, I am not going to buy another call option on SPY until we hit the 202 level on SPY, or 201.90, I guess, is what the new all-time high would be. That's the point with which I've kind of planned out going into this. So, should the market stay the same or just stay below 199 between now and February, in theory, then I'm an obvious genius. However, let's say that the market goes up and we're at 202 tomorrow. Well, if we're at 202 tomorrow, or at any point during this time frame, on theta, I'm better off, theoretically, because of the fact that there's some time decay with which I am not going to be having taken out of that call option because of the fact that there's no exposure to theta. The other reason with which I like this trade is because of the fact that if the markets do come higher, then what I will be doing, then what will likely happen, no guarantee, but what will likely happen if we were to go up to 202 tomorrow, we're likely going to have a drop in implied volatility. So with that being said, because of the fact that we're likely would have a drop in implied volatility, should we go to 202 tomorrow, and that's the worst case scenario for me, if we go to 202 tomorrow, then I don't think that I would miss, or I won't miss as much as would be perceived by just the basic delta of the call option right now, because of the fact that implied volatility would go lower. Now, I do this maybe once a year, and typically it's worked out for the better. When it has worked out for the worse, volatility has been kind enough to come down for me to kind of bail me out for being wrong. That's why I'm doing this trade. The other thing to mention with this is that I'm still selling premium via some put spreads because of the fact, and I'll kind of explain, I can explain that at another time, but I wanted to go through why I'm doing this with my call option, because of the fact that I think this is an important lesson to learn, and this is something that has benefited me a lot throughout my trading career.
Well, that was an epic doing stuff portion of the trading block there. Andrew, I defy you, sir, to vie with that.
What the hell did he just say? and I know Mike does a great job of adjusting, and basically, keeping ahead of the market and things like that. But I was trying to follow it. I swear I got lost. But yeah, I guess I'm daydreaming out of position in Nike and it just exploded. So that's good. But I'm anyway. But what I'm looking at is mostly why did the market drop? Is this interest rate jitters? Normally, I like to think if I could put like a finger on what's going on, like to explain why the vol's going up or the market's going down. I understand the old thing, there's more sellers than buyers and stuff like that. But normally there's a reason why people just dump stuff. So I was just kind of curious, why. So from a vol point of view, we got a little backward today as far as cash over futures. We didn't get much over the 16 handle in futures. And as I'm looking here at the end of the day, VIX cash has sold off a little bit into the end of the day. Not a lot from its highs we're just talking about. And we're going to close. It looks like we're closing slightly with us just a very, very hint of contango. So, we'll see as far as tomorrow. We could get a little bit more of a bounce. I didn't sell any more VIX call spreads today toward the end of the day. I'm going to wait a little bit maybe. If we weaken up a little bit, I'll probably pile in then. But, as it stands, like vol in general, it's pricing the move. It's fairly priced. And, all of a sudden now, for some reason, the last 3 days, we're getting like those 10-point plus moves. So we'll see what happens. But from a trade point of view, a little confusing. I think this rate worry is kind of sneaking in the market, and really, you never know where that's going to go. And I think that's part of the problem because the emerging markets are getting crushed and our market's getting kind of crushed. So I think, that strong dollar is, there's definitely a little bit of exit mania going on right now.
That's a fair assessment. Of course, you're an old school floor guy, so at the end of the day, it's more sellers than buyers today, sir, and that is what's driving everything.
Exactly.
As spoken as the old school guys used to tell me many times, more sellers than buyers, kid, who cares? All right, so looking at, of course, you mentioned Nike, that is indeed the other big player coming out after the bell today. They closed today 79, and the orders, as we used to say, $79.75, down about $1.09 or about 1.3% during the session. And that 80 straddle going out looks like at about 285 or so here. So pricing in a fairly decent move for an option that's pretty much kicking off tomorrow. And looking here, it looks like they just come out in the after hours, and like Andrew said, they are lighting it up. They're up to about 84, so they're up about $4 and about $4.25 or so here in the after hours, so well beyond that straddle's range. So looking fairly robust for Nike. What did you have cooking out there in Nike Senior Rock Lobster?
It was just something we were looking at the end of the day. I didn't do it. I did kind of my normal funky spec size. I bought an Ox 18, Ox ordinary straddle, and then I sold it like a strangle in front of it to try to reduce the cost a little bit. I figured they were basically giving you the straddle for a little bit less than the average move for the last 4 cycles. So, you don't have I didn't see a lot of downside in it basically you can get the move for nothing. And if you get more than the move, you make something. So but of course you can't do anything with it after hours here, except to dump some stock if it goes a little higher. But I'll probably be a greedy pig and not do anything. So we'll see tomorrow what happens.
It's always fun to be a greedy pig. It always works out so well, sir. It's a good strategy, I find.
Exactly.
All right, and with the epic trading block out of the way here, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. You know what that funky tune means. It's time to dive into the weird, the wild, the woolly, the bizarre, the strange, the head-scratching, the whatever adjective you want to call it, type of paper we're seeing lighten up the old options tape today over there at theoptionsinsider.com. The mothership, indeed, for all of this fun content. Going to kick things off with a newcomer here to the old Odd Block. This is X-Terran Holdings, Inc., ticker symbol EXH. Closing today, $43.25, down about $1 and change, or about 2.3% on the day. And it looks like this is the name that does about 400 contracts a day, so not the most robust, but not a meager name either compared to a lot of the other names we talk about in the odd block. Of course, today, lighting it up, doing nearly 10x that, doing 4,000 contracts today, and pretty much the lion's share, looking at the strikes here, pretty much all of that. I'm looking at any other strikes. A 3-lot went up. A 3-lot spread went up, the Nove 35-40 spread. But other than that, everything that went up in EXH today went up in this one trade, listeners. It was the Nove 45 or straddle going up a whopping 2,000 times. So there's your 4,000 contracts right there. It went up for $3.90. Looks like paper was selling. There's some paper open on the 45 calls, about 1,500. There's only 68 open on the put. So clearly this is opening on both sides of the fence, probably. Someone coming out here fairly aggressive, writing this line in the sand, saying EXH ain't going nowhere for the foreseeable future. Went up in several blocks with no stock, looks like, tied to it any way, shape, or form. So it looks like it is what it appears to be on the surface. Someone coming out here blasting out some deltas. Worth noting, this has a bit of a long delta bias. No surprise. Stock at 43.25. The puts are in the money. So you're going to get a little bit of a long delta on this type of straddle. An interesting trade looking at the chart here for a year. And there has been some movement in EXH, particularly in the beginning of the year. This stock was trading in the low 30 range. So it's up about 13 handles from where it was at the beginning of the year. So this thing can move. This guy clearly saying, yeah, not so much, at least not for the next couple of months. Senior Rock Lobster, what's your take on this guy pretty much doing all the paper here in EXH today?
He had the monopoly, I think. He was playing the monopoly game where I'm going to trade all of the paper in this particular name.
Someone came in and said, I'm just going to do a 3-lot just to mess up his totality. Just a 3-lot.
Exactly. Just so it's like, it's just not your, it's my game board too. Anyway, what it looks like they sold the strangle, gets them a little long delta, and it pretty much covers 60, about the last 7 months of movement for the name. So it is my guess is somebody interested in, probably a long hold, somebody that wants to be long, potentially somebody that already owns the stock, and just looking for a little juice on a position. That's how I would see this, or, just because the vol's kind of low. So I would assume that's kind of has to be a covered trade, and they just don't mind getting longer down, $4 from where we are essentially. So that's how I would see this. I didn't see any stock of any size go up with this though. So.
Yeah, that's true. It is a fairly aggressive from a net premium position. This guy's really got to have a decent move here in EXH for this straddle to go in his face. But like we said, it can happen. This thing has moved, not perhaps in this short of a time frame. Took a year to do it, but c'est la vie. This guy putting his money where his mouth is, drawing his line in the sand. We'll keep an eye on this one too. I think we'll file this in the to be watched category. We'll mark it right now, listeners. So we will come back to it later maybe we'll have a to-be-watched day on a regular basis just to check in on some of the names we've been watching and see how they're faring. Meanwhile, we're going to move on to our next victim in the old odd block today. This is the name a few of you may have heard of, including the Oracle of Omaha out there, Mr. Warren Buffett. Big fan of Coca-Cola, ticker symbol KO, of course. Closing today, $41.78, down about 50 cents or about 1% on the day. And surprise, surprise, Coke does some paper, does about 31,000 contracts a day, doing about that, about 32,000 today. So no obvious size trade, at least from a net total size, catching our eye. But there was one individual trade that was pretty sizable that did indeed catch our eye. Went up in one block, so very sizable and all done at once. It was the October 41 puts going up. When we profiled them this morning, 9,110 times for 19 cents. Paper selling by the end of the day, a total of 11,275. So another 2,000 and change going up after the fact here. So a ton of puts, over 11,000 going up on this strike. The later kind went up for probably about the same price or so. They went out, not surprisingly, bid up a little bit, the stock dropping off. They went out 23 cents at 25, so they went in their face a little bit. But this looks like, given the open interest on this strike, which is just a hair under 20,000 contracts, this has all the hallmarks of closing paper. We looked around for another leg here. Maybe this guy is going to move out of OC and roll into November or an OC weekly to take advantage. These are not in the earnings cycle. Maybe he wants to roll into the earnings cycle, but so far not seeing that other leg yet. So it seems like this guy is just coming in and closing out his long puts. A shame if he waited a little bit, he could have got a little bit better price for him, and that could make a dent 12,000 or so, 11,000 or so times when you're giving up a nickel that many times. C'est la vie, Mr. Rock Lobster, what's your take here on this sizable put closer here in Coke?
Yeah, I think he was buying to close. It was the paper was, he bought 9,000 of these. So he's closing a short put position and he's still got some more to go. I thought the thing that was most interesting is they didn't roll. They didn't buy in the short put and then went out to sell some more. They just closed dead. So that's telling you that, this guy or girl who sells a relatively fat amount of these things is not, they're not rolling. So, maybe they're waiting. So you take a little look-see and see if they go dump some more puts at a later date.
So yes, listeners, if you're confused, you were playing along the home game on the website, we did write it up as closing out a long puts, but we will address that. So if you're listening to the show, you got the right info there. So we're cranking out so many here on the site once in a while. We get some confused. It happens, even to the best of us, even to those we like to call the Rock Lobster. It happens to the best. Meanwhile, we're going to keep moving on to our next name. This would be PBF Energy Inc., another newcomer here to the old odd block, pretty much unched on the day, closing right around $24 and just a penny. Pretty much, like I said, unched on the day, not doing much. And you might expect, this is a name that doesn't do a heck of a lot. It does decent paper for an odd block name. About 750 contracts a day, doing about 2x that, about 1,600 going up today. And pretty much, once again, we see one trade dominating almost all of the paper. It was the OC 25 calls going up 1,411 times for 40 cents. It's like about another 100 or so filtered in after the day for a total of right around 1,500. All of that on just 261 contracts. It went up in one large block. Looks like it was on the surface. It looked like a buy rider coming in, so picking up some stock and writing the calls, but we didn't see any stock portion of it. So it looks like this is just someone coming in and selling these calls, probably with an existing stock position they already have on, so they didn't need to establish it today. Again, that's why some of this stuff gets a little bit tricky, listeners, is because you have to intuit what the people may be up to, what they already have on, because they're not putting it up today. Make it very clear and easy for us. Hey, here's a block of stock, here's a block of calls. It all went together. Very rarely is it that easy, hence the odd block, hence the great deliberations we go to on a program like this. Mr. Rock Lobster, we talked about overriders before, going far and farther afield to try to capture some yield in this relatively yield-free environment. What's your take here on this guy writing all these calls here in PBF?
I think he's taking the little pullback and whatever little pop and vol he can today and saying, thank you very much. I'm going to sell some calls. It would be, like anything, it'd be kind of an aggressive naked short for 40 cents. It has happened before, but I think it's a little aggressive for this right now. So my sense is they're like, okay, 1.6% to October expiration is not bad. 40 cent call against stock trading around 24. That's not too bad. So I think they're taking the money and running on this one. If they get taken out through 25, that's actually closer to like 3% for the period. So not bad. Not bad if you're trying to manage money, trying to generate a little bit of income.
Yeah, 3% in that short amount of time. I'm sure a lot of managers would take that. We were just looking on our futures options show at some of the returns these CTAs are getting, and a lot of them would be very happy with 3% in a few months, given the return some of these trend following and other managed futures portfolios are putting together this year. Rough year, particularly in the commodities side of the fence. A lot of whipping, a lot of sawing going on, which is throwing these guys for a loop. Speaking of throwing us for a loop, that's the end here of the Odd Blocks. I hope we didn't throw you for too much of a loop, but this paper gets a little weird sometimes. Meanwhile, we're going to keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. This is indeed the portion of the show where you guys get to join us here on the old program. It's Thursday. That means it's listener mail time. We love for you guys to join us here on the show, make your questions, your comments, your insights known not only to us, but to your fellow listeners as well. No shortage of ways for you guys to do just that, including surfing on over to the mothership, theoptionsinsider.com. You can leave us a comment on those show notes like our friend Kaiser Dog and a lot of other people like to do on a regular basis, or you can use that website feedback form. I know we had some problems in the past with some of that stuff getting caught up in some sort of weird issues and all getting dumped at once, but don't worry, we fixed it. So if you use that website feedback form, we get your stuff instantly now. I've even set it up to notify me just to make sure we don't miss any of your stuff. So don't worry. Some of you have asked about that. We've taken care of that loophole. So now all of your questions get to us right away. And of course, the social media outlets, twitter.com/options, facebook.com/theoptionsinsider, and the old fashioned way, email questions@theoptionsinsider.com. I guess old fashioned would probably be papyrus, but we're not that old fashioned here. Meanwhile, we're going to move on to our first question. Surprise, surprise. People asking about the big name of the day. This one comes in from a listener, goes by the handle, or maybe this is his name, Sinclair. He writes, what do the All-Stars expect for the big BABA options launch on Monday? If you've been under a rock, listeners, he is indeed referring to Alibaba options that are launching all things holding constant and steady on this Monday, September 29th. So we should all get a nice, good look at what's kicking out there in BABA from an options perspective. What do we expect, Sinclair? Well, we've seen this play out a few times in recent history, probably most recently with Facebook, but a lot of other IPOs since then and before then have gone a similar trajectory. I would wager that we're going to see it be kind of hard to borrow in the early days there as brokers get a handle on how many shares are out there and where they can get them. So as a result, whenever you have these types of names, in addition, this one has a lot of retail presence, a lot of retail mind share, so retail is going to be coming in. A lot of people thinking for whatever reason, maybe you do, maybe you agree, you don't, but a lot of people thinking that it's probably overvalued a bit, so there's going to be some interest in shorting to begin with. On top of that, it's going to be hard to borrow, so what happens in those scenarios? Well, guess what? Strategies that allow you to get short or bearish that is underlying are going to be very popular. Hence, puts are going to be very, very juicy, and that's probably what we're going to see coming out of here. Of course, that hard to borrow reflected in the rates going on in the puts. And, of course, people wanting to buy them, too. Those combinations will drive up those premiums out there. That hard to borrow issue usually sorts itself out within the first few days, if not the first week or so. And we'll see that portion of the premium probably melt away. But the other stuff, if people still want to get short BABA, people are aggressive on the puts, that part of the premium could certainly stay there depending on how this name moves. So that's probably what we'll see in the opening days, as well as probably just a flurry of volume. Everyone's looking for this thing. Everyone wants a piece of it. So we're going to see some good paper. So I'd imagine if you want to get in and out and want to, we won't have to work stuff too aggressively. I think you can come in and you'll get filled pretty quickly. At least if you're trading front month and some reasonable strikes. Mr. Rock Lobster, what's your take here on what we're going to be seeing from BABA come Monday?
Well, we've had some By the way, my goal for this year is to try to stop opening every sentence with when I'm on the radio with you.
It's a tough challenge, I know.
It's tough for me. We've had clients looking at this. The bar, I think, was like 15 to 25% or something like that. It was really high yesterday. The day before on the IPO, I think it's down to 1%. So
that's pretty fast.
At least for now, it won't have a huge squeeze. Well, there is some stock available. I mean, they sold a lot.
Yeah, this one, I should have mentioned, this one is a little bit of a different beast. They're not doing a handful of shares. They did all the shares.
They didn't do the engineered squeeze like in GoPro right now, which is trading $80, by the way, for all those are scoring at home. One of the more successful IPOs of a camera company. You'd think, when are you gonna make a video camera company? The IPO is gonna be up 200% after the IPO.
Yeah, up $3 today on a day when everything else was selling off. So they're doing something right over there.
Yeah, and look at the reversals there. They're like $6 underwater, by the way.
Anyway, I didn't mean to derail you. BABA, sir.
Yes, but BABA, again, I think it'll trade. My sense is that probably from the open, they're going to open normally what happens, they open the vol a little high, then it comes in. I think from this one, because it has the China thing going on, there's a lot of stuff. I would not be surprised if volatility in here found its way a little higher as time went on. I'm thinking maybe a 1 week or so kind of drop in vol if nothing really happens, right? Because you have that, BABA's open, and the liquidity providers, so listeners, liquidity providers like I used to be, you guess, where should we open it? I don't know, right? So you guess. And they will guess. There will be some kind of cross markets maybe for a while. It'll all settle out within the first half hour or so. And, if BABA doesn't do much as far as moving goes, vol will come in. However, since it was such a gap from the IPO price, was that like $25 or something? I would not be surprised if people did come in, maybe start to sell it a little bit, and a little short interest does start to develop, and we just see how it goes from there. But I mean, it took 6 years or 5 years for Google to get the market cap that BABA has right now, and it feels like it's a little ahead of itself. But what the heck do I know? China's a darn big country, so if I own the internet monopoly in China for various types of things or close to it, who knows what the value of that could be eventually.
Yes, that is an interesting thing. And it's funny you mentioned the liquidity providers. I think a lot of the customers out there think these guys have some sort of, crystal ball. They know instantly where the vol is going to be. No, they don't know. We never knew when we were on the floor. So you guess. You're right. And so it's going to be a little fluid in those early minutes of Monday as people are trying to figure out where should the implied be? Where should the skews be? Where should all these things start lining up? And then they start getting hit, and that's how things start sorting themselves out. So it'll be a little wonky in those first few minutes.
That's what I was going to say. Look to stocks like Baidu, Sina, Weibo, all these other ones. You'll get some idea of curve, some idea of implied volatility. It'll give you at least a sense because those are all Chinese internet names that are out there, have a little bit of a trading history, and you can see what happens. I mean, BABA could end up becoming a 20 volatility internet stock, which is possible, like Google. Google isn't a bad proxy for it. At some point, I don't know if it will be that proxy right away, but mostly at some point, it probably will tend to be toward a Google-esque.
By the way, you've completely derailed me with this GoPro. I'm diving into these options now. I'm just looking all over them. They've been averaging 43,000, doing 183,000 today. GoPro just lighting it up, closing at 81 and a quarter, and someone traded 311 of the SEP doubles today. in case you can't do the math, listeners, those are $26 in the money calls that expire tomorrow, and there's only 100 open. So he's opening 200 somewhere, if this is the same guy. At least 200 of the SEP doubles today. $26 in the money calls, so that expire tomorrow. So crazy business going on out here in GoPro.
There's a fund that's gotten, there was rumors about a fund blowing out, or a hedge fund getting aggressively short in this thing and just getting, their eyeballs squeezed out. For at least for an option pit in our chat room, the only thing we've looked at really is ratio call spreads. just buying more calls than you sell because the calls are trading so cheap, and the reversals are just insanely out of line. And you just do them for credits, and you wait and see if you get a big enough move up, and almost everything we had looked at one time or another, all those ratio trades, went very much in your favor. Let's put it that way. It's not stopping. It's like, when do you stop? Like, I don't know. Because it's trading 80, and I think it was trading 50 a couple of weeks ago.
Yeah, it's crazy.
Maybe last week.
Crazy. As usual, we've been derailed here in the mail block already. Tusaw, save us. What's your take here on BABA options on Monday?
You don't know. And so I think that I'm glad to see, just with the 1% short cost that Andrew's telling us, that I think that'll be a good thing for the liquidity. But this is something to where I'm going to take a look at, just because of the fact that I think that anything that is so hyped as it is, I'm tempted to tickle the old speculative bone and start doing some type of shorting on this in some way, shape, or form.
Ooh.
Uh-oh. Wow. Uncle Mike. What have you done with the real Uncle Mike? Bring him back.
Whoa. Long apple, short BABA pair. You heard it here, folks.
That is right.
Tusaw is coming out swinging.
So what are you going to do to get short here? You going put spreads, puts? You going to go underlying, God forbid?
Well, to start off, nothing. But that's just something to where if I had a gun to my head, I would be bearish on it right now. But I'm going to take a look at it next week, and should I decide to dip the old toe in the speculative waters, I will keep everyone notified.
Well, good stuff there, sir. I will look forward to your notification of your crazy Apple BABA pairs trade.
The little birdie. Wait for the birdie.
Or it could all be a big hoax. You never know.
I mentioned on the live show a lot of people coming in and commenting. I don't mention this very often really either, but you can, of course, leave comments if you like on the old iTunes feed as well. Some people choose to do that. If you have a question, I wouldn't recommend you doing that because we don't check it as often, so it might be a little bit delayed. But comments are fine. Hopefully 5-star reviews. If you don't like Tusaw, you can maybe go 4. I can understand that. But say la vie. I got people writing a lot of comments out there. This one came in from Princk. I believe that's how you pronounce that. He writes, listening gives tremendous insight into options trading strategies and trends. Great team that combines risk management, speculation, and investment wisdom. Superb, thoughtful, funny, and wide-ranging show for learning and understanding options trading. So I'm not sure which one of you guys wrote this, but I appreciate it. It's a great review, guys.
It was me. I helped him. I was going to mention my name, but then I thought it would be too obvious.
Yes, clearly. So we have at least one fan out there. He is joined apparently by Bajasaki, who writes, love the show, very informative, looking forward to more fresh insight every episode. So if you're playing the home game listeners, that's 2 fans we have out there now. So it's growing slowly, exponentially, I should say, actually. 1 to 2 is an exponential.
That's double.
Yes.
Thank God.
Exponential growth rate. I found one more here really quickly. These people have been leaving these on iTunes and they get no love here. This one comes from Punt Pass Shoot. And he writes, there are a lot of financial podcasts out there, not a lot of good ones, though. Well, I could concur with that. It's even harder to find something useful about options. The option block really gets it right. Just the right amount of information, banter, and market insight to make it something I look forward to listening to every week. Great energy between the guys, interesting guests, and useful traders of all. They put rangers here. I think they meant ranges. We could be rangers, too. You never know. If you're thinking about subscribing, stop thinking, just do it. Well, there we go. Apparently a Nike fan, too. Just do it. I like it. But, so a lot of love coming in on the iTunes. I read the only negative one I could find on the live show a couple weeks ago. That was someone slamming Sebastian over Apple.
and what that was the funny thing is, like, now Sebastian's going to come back and say, see, if you sit on the phone, it breaks. It sucks.
Exactly. I can't wait for the next time he's on, his next Apple rant. I think we'll close out the mail block here with an interesting, almost, I suppose you can say, theoretical question here. This is from one of our regular commenters on the website, Kaiser Dog. He writes, I have a question for the Guardians of the Gamma. I like that. He writes, when do you like to exercise an option? Is anyone a fan? Do you ever like taking the stock over rolling? Thanks again. By the way, the shows have been stellar. Keep them coming. Well, thanks, Kaiser Dog. Now with him and the other 2 guys, we got at least 3 guys listening, so that's good to know. And, it's an interesting question. That's not something I encounter very often, and I'd wager a lot of our my fellow All-Stars don't as well. I will, at times, if I'm doing like a wheel trade or something like that, where my intention is to get long the underlying, I will allow shorts to be put to me. But there aren't many scenarios, aside from like some of the odd dividend scenarios you talked about before, where it's worthwhile exercising. Other than that, it's not many scenarios where I like to actively exercise an option. Maybe it's the old school market maker in me where you kind of just close out everything going into expiration. That's typically what I do with this. I'll close out, positions that I go around expiration just because I don't want to have any of those hassles to deal with. The only times I will allow things to be exercised is when, like I said, when I have underlying involved and there's a short option leg, like let's say a covered call and I'm fine getting out of the underlying. Let's say it's in an IRA, something like that. And I want to move on to another trade. So the covered call is kind of like my excuse to sell the stock at a level that I'm attracted to. Or the flip side, if I want to use it in the retirement account to sell a put to get long some underlying, that's pretty much the only times I really deal with expiration and allow these options to expire and be put to me. But other than that, I don't really play that game too often. Mr. Uncle Mike, do you ever exercise your options?
The only time that I would be this scenario. Let's say that I am in a straddle, in some type of a mix-matched month straddle to where maybe I'm long a July put and then I'm also long let's say it's May, and I'm also long a May call, and May expiration is coming. And so at that point, it's expiration Friday, and we get a major move up in the stock. And at that point in time, the bid-ask spread on my long call is 9 miles wide, let's say. Well, if I have a portfolio margin account, what I would then do would be to exercise that option, assuming that I still wanted to have some type of upside potential. I would exercise that option and then close out the stock if there were a very wide bid-ask spread. Like you were mentioning, Mark, if there's dividend situations, we've talked about that on the show enough times. I'm not going to touch on that. But that is a situation to where I would actually exercise an option.
There you go. It's got to get pretty far afield for you to start exercising. Mr. Rock Lobster, what obscure scenario would cause you to exercise an option?
Well, the first thing to remember is when you exercise a call, that is like synthetically selling a put. Don't forget. So when you exercise a call, you're basically turning call risk into long stock risk, which synthetically is selling a put. So in my head, you have to have a pretty darn good reason for doing that. Now, I could see Mike's reason if he was trying to close a long call and the market makers are giving you a dollar-wide market and you're going to give up a ton of money. I could see exercising and just taking the parity value, but that's assuming you'd be doing that kind of at expiration, right? So you're ready to take the stock at that point anyway. But just sort of randomly exercising an in-the-money call, unless you're really getting a dividend and want the divvy to keep the stock, I don't really see too much of a reason to do it because you're essentially selling a put for free. And we don't like selling puts for free. We actually like getting money for those. So that might help as far as that question goes.
Spoken like a man who's been doing some educational webinars of late, sir.
Well, I've done one or two.
So there you go, Kaiser Dog. I think all of us have a deep-seated aversion to it for many of the reasons we've said, like Andrew just spelled out. At the end of the day, that there's still time value there, unless you're talking, the microseconds before expiration. So you always want to capture that time value at the end of the day. So there's not many scenarios, except for the weird, obtuse ones we just laid out, where I think any of us would ever consider that. And Andrew and I both come from that old school market maker background too, where you just close everything out regardless. You don't let them go exercising. So that's probably impacting us a little bit as well. But a good question, a kind of a interesting thought exercise for the scenarios where you might want to do it. As you might imagine, not too many. All right, that's going to do it for the old mail block, and now we're going to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, like the man said, this is indeed the portion of the program where we break down what we're watching for the end of this week into the old weekend. A lot of stuff to watch. Uncle Mike, I think we'll start with you because the most action is in your neck of the woods. What are you watching for Apple? What are you watching for gold? What are you watching for the S&Ps? And what are you watching in general? So and don't tell me the 10-year because I'll mute you. I will.
Jump on the boat with a 10-year note. I just love saying that. A couple things. First off, just to kind of add to the last segment, I don't think I have exercised an option in unless it was part of a spread that maybe I was letting expire worthless, which that I seldom do. I don't think I've actually exercised an option ever on purpose in my trading career, so I don't think that it's ever happened. But to answer your question in terms of what we're looking at, definitely staring at the S&P. It's going to be kind of weird for me now without any upside exposure on the calls. I still am long SPY, long put, so I still am in that position, but definitely trimmed a little bit back, so if we do come back, I'll be watching to see if vol comes down as well. In terms of Apple, if we come down a little bit more tomorrow or if we just level off a little bit, I would love to sell a put spread going into the bent phone pullback. So looking at that, in terms of gold, GLD right now, as I'm looking at this, it's around 117.40. We're in the put spread that expires tomorrow, the 116-112 put spread. So would love to get out of that for a penny or something along those lines tomorrow and play again for the following week. So a lot of things to look at right now in terms of the news events. Definitely watching the Middle East, as you always have to if you're in this business. But mainly, I don't really think we have anything too big coming out until the non-farm next week.
I think you forgot to mention exercising all of your long options as well.
I think I might do some of that as well.
All right. Mr. Andrew, what are you watching? And by the way, you can admit to us now, it was you doing that 300 lot of the SEP doubles in GoPro, wasn't it?
Well, that's because I knew it was going to be squeezed and it was going to go up a bunch, I guess. But yes, my biggest, I'm still trying to figure out why the big sell-off today. Maybe another Fed guy said, hey, they're floating these interest rates are going up in 2015 balloons again. They float that balloon, yet Treasuries still rise in price. So I guess whatever they're trying to do is not working. There will be an endless appetite for Treasuries for as long as we are alive, it feels like sometimes. But what am I watching? To see if we get a little pullback in volatility, if the market, bounces. I guess we need some good news for it to bounce. We haven't really gotten much lately. I view these airstrikes against the ISIS people as pretty positive. Like we're kind of getting in there and doing something, making the world safe for democracy kind of stuff. That stuff, usually the market likes it. Has not liked it much lately. So kind of a weird, again, like I'm saying, I don't know if it's the rate fear versus like we had some positive economic data overall the last couple days. So clearly there's some big piece of sentiment. My guess it's interest rates that, as Yellen kind of talked it down a little bit. So some feels like everybody's talking it back up again and that's freaking people out. So there you go. Sell some out of the money puts to take some stuff much lower. Because I think you might have, it's possible you might have a shot at it or at least keep the put. But, I'm starting to look at like the 1960 level, 1950 level, stuff like that. So
all good years for selling puts, sir.
All good years for selling puts, exactly. And just the range is getting lower. So, we're trading 1965, getting down there now. 1950s, 1920s, 1900s. What the heck, right?
What the heck?
Forget about that whole rally we had last year. Take it all back.
What the heck? At the end of the day, what the heck? And we should, one final check in here on the sole name reporting after the bell today. That is Nike. They're still holding on to those gains, trading 84.40 right now. It's actually a little bit higher in the after hour. So if you're one of those people who are worried about a pullback before you can unload some of those long premium positions, looks like you may have a good shot going into the opening bell tomorrow of being able to capture some of that. So interesting stuff here. We'll keep an eye on Nike as well. Unfortunately, that's all the time we have for the Around the Block segments. Also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here, my partners in crime on the old ASP, to see what they have cooking. Mr. Maine, we'll start with you. What's the fishing like over there in Maine?
Well, not a lot of fishing right now. Still lobstering, but no real fishing. But we got big stuff going on. If you go to optionpit.com, if you click the event tab, you will get absolutely for free, and I'm not kidding, the webinar marked it on a VIX and the VIX ETPs, so you can understand how VIX and the VIX ETPs kind of work together, how they're priced. It's free. optionpit.com/events. And you could do me a big favor. If you like the free content, we're going to also work on how to actually, trading the products, putting positions on in a 150-minute webinar. That's $47. Okay. You can register now. You get the webinar for free. And for the hour that Mark did, you'll learn more about the VIX in a useful way for nothing than you will listen to, CNBC for 4 straight weeks. So I'm just going to say the webinar that we're putting out on October 4th is great. And the free webinar we have available on our website for you, optionpit/events, is fantastic. So come by, check it out. If you like listening to me on the radio, come and visit our website and make me happy. Thank you.
There you go, listeners. A very heartfelt plug from the Rock Lobster. Mr. Tussaw, let's see if you can outdo that. What's coming up in the land of RCM Wealth Advisors?
Oh, I had 3 things to mention. The first thing is that on October 4th, folks, I think you should definitely go see Andrew online and make him feel happy because October 4th is National CB Day. Not many people know that because when everyone says 10-4 on the CB radio, October 4th is National CB Day. Second thing, December 10th, Miami, RCM will be having an event down there, so make sure you check it out. For more info on it, go to rcmfutures.com. And last but not least, if you are a person who has around $300 to $500 per month you'd like to contribute to retirement, you'd like to have an option type person managing your money or at least consulting with you in one way, shape, or form, give me a call, 312-212-3531, or send me an email at mtusaw@rcmam.com and make me feel good.
There we go. Make all of our friends here on the old All-Star panel feel good. That is your duty, listeners. And on behalf of Uncle Mike and the Rock Lobster, and indeed the Viceroy, who is wearing a fancy hat somewhere while he recuperates, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. Keep them coming, even those of you out there in the iTunes land. We welcome all of you, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.